All right, so welcome to another video. Today we're going to talk about the importance of position sizing in SPX Weeklys. I know not the sexiest or most fun topic, but I find that most people, what happens is they actually focus on the wrong things. And they're focusing on maybe charts. They're focusing maybe on how to do this strategy. And I get it. Those are basic concepts. You might say, no, those charts are the right things. And yeah, in theory, you got to know the basics. That's fine. But later, when you start really evolving as a trader beyond the basics, when you're trying to grow that account, really there's two main things that you'll want to focus on. Number one, psychology, mentality, and making sure you're disciplined. And number two is going to be position sizing. And most people are not focused on position sizing or risk management. You look at all the news channels, what's happening, they chat about stocks. Very few talk about risk management or how to handle the positions. So anyways, in this video, I want to chat a little bit more about position sizing because I think it's important. It's not really a fun topic that most people want to get into, but it's probably one of the more important ones to kick off on. So in order to get things started, I want to show you this little diagram and chart that I made in Excel. I do a bunch of other little studies and tests all the time. Like here's one I do on Amazon. I do like little checks, Iron Condor, if it would win and so on. So, you call it, this is my Friday night fun time that, that I spend doing all this kinds of stuff, percentage negative and so on. So anyway, what I wanted to do was to show you this data set of one of the recent studies I did, just kind of a simple point on position sizing and really the importance behind position sizing. Because what happens is that when you go in, if you have the same data points and the same data sets coming in, if you're doing, let's say, SPX 0-day or weeklies, you've got certain ticks. You're either winning or you're losing on that tick or that trade. And you really don't know what that next one will be. You kind of have an idea, but you really still don't know 100% if you're going to win or lose. So what I did here is assumed a little simple system that in the past, if the tick was kind of on the upside, like let's say we check if the move was up or down, then we'll mark it as a 1 because now the price is going up. And then the directional bet will be the same as that previous tick until we kind of lose. So that's just the simple system. So then we come up with our wins or losses. Okay, so win, 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 loss, win, win, loss, loss, win, loss, win, win, loss, loss, loss. So you can see there's not really a bunch of technical analysis involved. It's just based on the previous tick. So super simple. And you can see this system panned out with a 43% win rate. So it's a very low win rate, really less than 50%. But I want to show you maybe four different systems here. If we did an equal bet, let's say we win 100, lose 100 on a simple vertical, what that came out to. So when you do a simple equal bet on all of them with a lower percentage here with a 43%, all right, let's switch it to a percent, 43% win rate, you're actually on an equal bet setting right here, let's pull it up, you're down $700. Okay, and that's, betting $100. Now, there's another system, position sizing. Everything else is equal. So again, we're assuming everything else is equal, the win, the loss, and so on. All we're doing is changing the position sizing. So that's what I want to show you is how critical and important the position sizing is. And every system, every strategy, every position sizing concept that you deal with will be different. So don't think that the one I'm showing you here is going to be the best one. So fair warning here. So if we double on the loss and try to kind of reduce our losses. So let's say we win, we bet 100, we bet 100. Now we lose one. Then the next step is, well, let's bet 200. Okay, we're just doubling up on the loss. Great, we won. Now we're back to 100. Okay, we lose 100, we double up. Well, we lost on that, fine, we lost, then we'll go back to the 100. We just attempt to get a second one, double up on the loss. That system, we're down actually $1,000. Now, let's take 3 times the heat or 3 times the loss. If we were able to handle 3 times the losses in a row, so now we're doing the same concept, but when we get like minus 100, minus 200, then we'll bet the 400. We actually then sometimes will win when we get only 2 losses in a row. So that means we're able to handle 3 times the losses. We get 400, which eliminates these other 2 losses in a way. We get our money back. So in this case, we're actually down 1,900. Why? Well, really the issue here is we had a handful of losses here coming in with minus 100, then minus 200, minus 400. Then we had that happen again. So 3 times the loss, we got a little more heat. Now, here's a different system. Let's invert it a little bit. Let's say on the 2 times the win. So you win, then you double up the win, and you keep it the same. So you double up the win and keep the same, okay, until you lose. So we doubled it up and we kept it, okay? Then we did a minus 200 on here. But then what happened was if we lost, we go back to the $100 bet. $100 bet, then we doubled it up, 200, great. But we lost, so we lost that 200. So we kind of, this one canceled out that one. Then we go back to 100 till we win again. So we lost that one, then we win, then we doubled it up, but we lost that one. So anyways, that system, we were only down $600. Again, remember, this is at 43% rate. But here, what I want to show you is a 3 times, if you tripled the bet after the first win, what happened? So the way this works is that if you go 100 and then after that first 100, you 3 times the second one, but then you go back to $100 bets till you lose. And then after that loss, you go back to trying to get your first win. And then you triple it up again on the first one. So you can see here, this is the win column. So I'll win 100, then I triple it up, 300. Then I go back to 100 because I'm probably going to lose soon. Okay, then I lost 100. Then I go back to trying to win one. I won one. Then I tripled it up. There it is. I won it. Then I go back to 100. And you can see, boom, that actually worked out well where you lost it, but you only lost 100. Lost 100, win the 100, then tripled it up. This is where you lose that 300. So again, the process: win 100, triple it up, 300, then back to $100 bets till you win one, triple it up, 300, boom, and then back to 100. So you can see in this case, what's interesting is you win $700 across over a year trades. So that's what I want to show you, is that even with a low winning system or strategy of only 43%, the position sizing and the way you handle the account matters a lot. And that's what people don't get. They focus so much on charts. They focus so much on other things. And when position sizing is way more critical, way more important, risk management, money management, way more critical, psychology, mentality, way more important. But yet, it's not something people focus on. Anyways, just let that soak in a little bit and give you a little insight on all this, because it's a huge, huge topic and way under discussed that most people just don't fathom or get. And they're chasing the dream, but they're not focusing on proper position sizing. Anyways, if you wanted to know where this data was, this was, by the way, the PayPal data on the last 52 weeks. Otherwise, whether it's SPX or PayPal, it doesn't really matter, because you're just playing the up and down ticks anyway. And yes, now you could add in indicators saying if the trend line's going up, then you could have maybe a better statistical probability of wins. And if that was the case, then some of these would be more winners. But I just want to show you how the difference in just position sizing can really matter in a big way. Anyways, thanks for all the comments, fellowship, and all the things you guys write in. Super sweet and kind. Don't forget to check out tradersfly.com on our website. There's a lot of freebies, goodies, coaching sessions if you're interested to work one-on-one, and people I work with for 3 months at a time. Check out the website. I will see you in the next video. Take care. Bye-bye.